Hey everybody, Abdullah Shamari here. Today we're going to be continuing our series on financial statements and we'll be going over liabilities. Let's do it. Make sure to subscribe to my page, crush the like button for the YouTube algorithm, and check out my Patreon link below. You'll get insights into my watch list, my portfolio, my daily readings, as well as instant posts on my buys and sells as they're happening each and every day. We're going to be going over liabilities, continuing our video from last time on the balance sheet. We're again here on the SEC website where financial statements are disclosed for all public companies. So here we'll continue on the liability side. First, we're going to go over current liabilities. Again, current liabilities, similar to current assets, are liabilities that are due within the next year. So here we can see they have accounts payable. So these are basically just various bills that the company owes. We can see they have 192 million accounts payable or bills that they need to pay in the next year. And then in addition, they have accrued liabilities. So accrued liabilities are various different liabilities that the company has, and it might not necessarily be a bill that they might owe, but they're just dollar amounts that they potentially will owe to various different companies for various different services. So the company's estimating what these liabilities are and what the upcoming bill is going to be for services that were provided in the past year. So we can see their accrued liabilities are 501 million. For many pre-revenue biotech companies, the biggest accrued liability is clinical trials, where they're doing clinical trials on various people. So all of these labs are sending them bills for the various trials that the company is doing. Long-term debt, current portion. So we can see they have 511 million of debt that's going to be due within the next year. That's what this means. So then we have the total current liabilities here of 1.2 billion. Next, we're going again to operating lease liabilities. This is paired with the right of use asset that we talked about on the asset side of the balance sheet. These are basically leases that the company has throughout the world for various offices that they occupy. Next is long-term debt. So here, this is showing that 673 million of long-term debt is due longer than 1 year. So this is debt that the company potentially has due in 2 or 3 or 4 years upcoming. So that's 673 million. Next, we have commitments and contingencies. So these are various commitments that the company has and contingencies for potential losses or legal liabilities that the company has, etc. So they're showing that they have potentially $303 million of potential liabilities that they have to incur for, whether it's legal lawsuits or potential commitments that they made based off of agreements or royalties they have to pay based off of collaboration agreements that they have with other partners. So that's what that is. We'll quickly go over stockholders equity. It's not a big section and it's kind of paired with liabilities. So stockholders equity is basically summarizing how the ownership structure of the company works. So we have preferred stock, we have common stock. Generally, most public companies don't have preferred stock. If they do, usually the founders or the early investors in the company have it. Most everybody has common stock, which is this $2 million. The common stock has par value as well as additional paid-in capital. The par value is usually at less than a cent, depending on the stock. So here we can see the par value is 0.01. And then additional paid-in capital is the additional amount that you pay to own the stock above and beyond the par value. Accumulated other comprehensive income, we can see that the company's generated income over its lifetime. Accumulated other comprehensive income, this is the income that the company has generated in the current year, and this is coming from the income statement. Next is retained earnings. So the company's generated $4.7 billion worth of earnings over the lifetime of the company. So we can see that the company overall has been profitable. And then lastly, we can see Treasury stock is the amount of shares that the company's repurchased of its own stock. So we see this many times with various companies where they purchase their own stock because they feel like that's the best investment that they can make with the cash reserves that they have. So we can see here that the company has Treasury stock balance of negative $3.8 billion. We can see that they have Treasury stock of negative $3.8 billion. This is a quick summary of the liability section of the balance sheet. Gives us a full scope of the company's balance sheet and how to view the balance sheet, what's detailed in the balance sheet. In future videos, we'll go over how we can get additional information on each of these sections within the footnotes of the financial statements, like we mentioned in the last video. However, this is a great overall view of what you're looking at when you're looking at the balance sheet. These are all important line items, and it gives you great insights into how the company is going to do and how the company has done in the past. As always, make money, enjoy life, peace.